For many Canadians, debt is a four-letter word.
And have big debts.
And yet it's something we use very often. For small treats like tossing some Uber Eats on credit, or something bigger like mortgage on a house.
It is too bad that we're sucked into using credit all the time, for sure. It's harder to manage your money when you have to put everything on credit, and it can lull you into a false sense of security.
Borrowing money they don't have will add to their debt, which is screwing them over in the long run.
The numbers tell us Canadians are carrying more and more debt, and certainly no one likes to know they owe money.
So easy to take out a card when you go in a store and you see something, oh, I would like this, but it don't work this way.
There's no cash in the bank.
There's no cash in the bank.
But have we taken on more than we can afford? Are Canadians drowning in debt? When it comes to debt, economists like to look at it in relation to income. How much debt do you carry compared to how much money you make? It's called the debt-to-income ratio, and in Canada that ratio is getting higher.
We are seeing non-mortgage debt in general rising, and in particular on credit cards. We're seeing balances on credit cards really starting to increase, and some of that is going to be linked to the current economic climate. Some of it's going to be inflation caused, and some of it is actually maybe consumers relying on using credit more and more.
While most Canadians are carrying more debt these days, millennials have it the worst.
Life costs so much money. It's so expensive to live. Housing is out of control, whether you rent or own. If you're sort of like an elder millennial or heading into those peak earning years, you're probably also at the most expensive years too.
And there is a good reason for that.
Maybe you've got a mortgage or a high rent and you've got kids, maybe there's a lot of demands on your money during that period of time.
So millennials have more debt, but is getting into debt really such a bad thing? And in many cases, isn't it unavoidable?
A lot of people use debt to set up a small business. A lot of people use debt to get their first house. Most people are using debt really to kind of move forward in their life and be able to do things that maybe they couldn't. As long as you can afford it, and as long as you're willing to be able to manage that debt in certain cases like a mortgage for a long period of time, I think it's a very useful tool.
There is good debt. I mean, quite honestly, most of the time that we look to achieve our goals, we're going to have to borrow them. It might be to borrow a car, to buy a car. It might be to, obviously, a mortgage on a house and whatever. Debt, it can actually be a very positive thing if, in fact, you know that you can afford it.
So according to most experts I spoke with, it's okay to take on debt, as long as you can pay it off. Unfortunately, there is evidence that's becoming harder for an increasing number of people.
When we start to see things like the percentage of consumers who are paying off their credit card in full, or maybe looking at kind of minimum payments, are those things going up or down? That's what we get more concerned about, because that typically are early warning signs of financial pressure and stress coming into the marketplace.
Equifax says people across the country are having more difficulty clearing their credit card balances lately, and they've noticed a connection between credit card debt and mortgage debt.
Some younger consumers, we're seeing particularly individuals that have had a recent mortgage renewal right now, they are starting to show signs of financial difficulty. We're seeing missed payments go up. We're seeing less transactors, less people paying in full on their credit card. We're seeing the pay rate itself.
That connection shows up in markets where housing prices have especially been pronounced. Take, for instance, that Equifax tracks Alberta as having the highest consumer debt in the country, but more missed payments are coming from Ontario and BC, where housing prices are typically higher. Those big mortgages have left millennials with a lot of debt and more vulnerable to rising interest rates.
We are the generation of Canadians that were blinded by those extremely low interest rates and were assuming a lot of debt, especially mortgage debt, so it went up dramatically. Now with interest rates rising, you have to pay that debt.
As Tal points out, any conversation about debt also has to talk about interest rates. Because all that debt folks are leaning on, suddenly it's costing more to pay back because of rising interest rates.
Young people have more debt, but the magnitude of the impact is more significant, and the sensitivity to higher interest rates is more significant. We have a generation of young Canadians that until now never experienced high or even rising interest rates. For them, those extremely low interest rates were nothing to talk about. It was the norm. All of a sudden, they witnessed this huge increase in interest rates, and it's a major shock. It's a major shock that it's still unfolding.
I started looking into debt to see if Canadians were in over their heads. What I found is that mortgages have become a major part of the debt picture, especially for millennials, and what happens over the next year could be make or break for many households.
And depending on what happens with interest rates over the next 12 months, it could get even worse. And I say that because if you think about, a large group of the mortgages that are renewing right now were probably booked back in 2019. Typically, 5-year fixed rates tends to be one of the more popular mortgage products. And interest rates, that's what we're concerned about for next year and into 2026, because as those mortgages come up for renewal, the payment shock on those could be even bigger unless interest rates have come down by that point. And again, that all depends what's going to happen this year in terms of inflation and things. And we are headed in the right direction, which is great. But there's always that, it's a real fine balance.
Also, make sure to check the description below for our sources and more useful links on the topic.